Have you ever wondered how someone like Warren Buffett, one of the richest men in the world, built his fortune from scratch? Today, we're diving into 21 powerful finance tips from Warren Buffett himself that can help you build wealth, even if you're starting with absolutely nothing. Trust me, these tips are life-changing, and they're easier to implement than you might think. But before we get started, if you're new here, make sure to hit that subscribe button. We're building a community dedicated to personal growth, financial wisdom, and success stories that inspire and empower you. Your support means the world to us, and subscribing ensures you don't miss out on any of our future videos. So, without further ado, let's get right into it. Warren Buffett's wealth is often attributed to the power of compound interest. He famously said, "My wealth has come from a combination of living in America, some lucky genes, and compound interest." Compound interest allows your money to grow at an accelerating rate over time as you earn interest on both your initial investment and the interest that has been added to it. Buffett's approach to building wealth was simple: invest early and reinvest all profits. The earlier you start, the more your money compounds. Even if you're starting with small amounts, the power of time and compound interest can lead to huge gains in the long run. Start investing as soon as possible, even with small amounts. Compound interest will do the heavy lifting over time, multiplying your wealth exponentially as the years pass. Warren Buffett has long emphasized the importance of focusing on what you know. He refers to this as the circle of competence. Rather than chasing after industries or investments you don't fully understand, focus on areas where you have expertise or a deep understanding. For Buffett, this means sticking to businesses he can easily evaluate and comprehend. He famously avoided technology stocks for many years because he felt he didn't understand them well enough. Instead, he focused on consumer products, insurance, and banking, industries where he had an edge. Stay within your circle of competence. Only invest in businesses or industries that you thoroughly understand, reducing the risk of making uninformed decisions. Buffett's patience in investing has been one of his greatest strengths. He has famously said, "The stock market is designed to transfer money from the active to the patient." Buffett doesn't rush into or out of investments based on short-term market movements or trends. Instead, he buys quality stocks and holds onto them for the long term, often through market ups and downs. By avoiding the urge to constantly buy and sell based on market news or short-term fluctuations, Buffett allows his investments to grow steadily over time. Patience is key in investing. Don't be swayed by short-term market movements or trendy stocks. Stick with your investments for the long haul and let time work its magic. Value investing is the core principle of Warren Buffett's investment strategy. This means buying stocks that are undervalued by the market but have strong fundamentals, such as good management, stable earnings, and the potential for future growth. Buffett believes that the market sometimes misprices stocks, creating opportunities to buy great companies at a discount. Buffett once said, "Price is what you pay. Value is what you get." His strategy involves identifying companies whose intrinsic value is higher than their current stock price and holding on to them until the market corrects itself. Look for high-quality companies that are undervalued by the market. This allows you to buy stocks at a discount and benefit when the market corrects itself. One of Buffett's most famous pieces of advice is to invest in yourself. He believes that the best investment you can make is in improving your skills, knowledge, and health. Buffett has said, "The best investment you can make is in yourself. The more you learn, the more you earn." Investing in yourself can take many forms, from formal education to self-learning through books, courses, or mentorship. By improving your abilities and making yourself more valuable in the marketplace, you can increase your earning potential over time. Your best asset is yourself. Continuously invest in your education, skills, and well-being to maximize your financial potential. Buffett is a strong advocate of avoiding debt, especially high-interest debt like credit card balances. He once said, "The trick is, when there's nothing else to do, do nothing." This means avoiding the temptation to overspend or rely on credit. High-interest debt can quickly snowball, making it difficult to achieve financial independence. Buffett's own lifestyle reflects his commitment to living within his means. Despite his immense wealth, he has always been frugal and avoided unnecessary debt. Avoid high-interest debt, especially credit card debt. If you're currently carrying balances, make it a priority to pay them off as soon as possible to free yourself from financial strain. Buffett attributes much of his success to his ability to say no to things that don't align with his goals or investment strategy. He believes that learning to decline offers or opportunities that don't fit your long-term plan is crucial for success. By staying focused and saying no to distractions, you'll be able to direct your time, energy, and resources toward what truly matters. Buffett once said, "The difference between successful people and really successful people is that really successful people say no to almost everything." Success often comes from the ability to say no. Stay focused on your goals and avoid distractions that don't contribute to your financial well-being. Buffett's philosophy of reinvesting profits rather than spending them has been key to his wealth-building strategy. Early in his career, he bought small businesses and used the profits to acquire other businesses, continuously reinvesting to grow his portfolio. This principle applies to both business and stock market investing. Instead of taking your profits and spending them, reinvest them to continue growing your wealth. By doing this, you allow your investments to compound and increase your returns over time. Reinvest your earnings to build wealth faster. Whether in business or stocks, reinvesting profits will lead to greater long-term financial growth. While Buffett is an advocate of long-term investing, he also believes in keeping a cash reserve. This cash reserve allows him to take advantage of market opportunities when they arise or weather economic downturns without having to sell off his investments at a loss. Buffett's company, Berkshire Hathaway, always maintains substantial cash reserves to capitalize on investments when the market is down. Having a cash cushion allows you to stay calm during market volatility and take advantage of buying opportunities. Maintain a cash reserve to protect yourself during tough times and to take advantage of investment opportunities when they arise. Buffett has consistently warned against trying to predict market movements. He has said, "Forecasts may tell you a great deal about the forecaster. They tell you nothing about the future." Instead of relying on market predictions or trying to time the market, Buffett advises focusing on the quality of the companies you invest in and sticking with them for the long term. Attempting to time the market can lead to missed opportunities and increased risk. No one can accurately predict short-term market movements, so it's better to focus on the long-term potential of your investments. Avoid making decisions based on market predictions. Focus on the intrinsic value of your investments and let time and compound interest work for you. Buffett believes in diversification, but only to a certain extent. He once said, "Diversification is protection against ignorance." While it's essential to spread your investments to reduce risk, over-diversification can dilute your returns. Buffett prefers to invest in a smaller number of high-quality companies that he understands well, rather than spreading his investments too thin. For the average investor, diversification is important, but it should be done intelligently. Diversify your investments to reduce risk, but don't overdo it. Focus on investing in a smaller number of quality companies rather than spreading your resources too thin. Despite his enormous wealth, Warren Buffett is famously frugal. He still lives in the house he bought in 1958 and drives a modest car. Buffett's approach to spending has always been conservative, and he believes that living below your means is one of the key ways to build wealth. Spending less than you earn allows you to save and invest more, which leads to faster wealth accumulation. Buffett's frugality shows that it's not about how much you make, but how much you keep. Live below your means. Being frugal allows you to save more, invest more, and build wealth faster. Warren Buffett is no stranger to making mistakes, but he always learns from them. One of his famous quotes is, "In the business world, the rearview mirror is always clearer than the windshield." He acknowledges that mistakes are inevitable, but it's how you handle them that makes the difference. Buffett has made significant investment errors throughout his career, but he uses each mistake as a learning opportunity to improve his strategy and avoid similar errors in the future. Learn from your mistakes and use them as stepping stones toward better decisions. Don't be afraid of failure, as it's an inevitable part of the journey toward success. Buffett has consistently advised against following the crowd. He believes that many investors fall into the trap of herd mentality, buying into stocks or trends simply because everyone else is. Buffett's success often comes from doing the opposite of what the majority is doing. He says, "Be fearful when others are greedy and greedy when others are fearful." This philosophy has helped Buffett find opportunities during times when the market is in turmoil and avoid risky investments when the market is overly optimistic. Don't follow the crowd. Make investment decisions based on thorough research and long-term potential, rather than short-term trends or market hype. Buffett's investment philosophy revolves around thinking long-term. He doesn't try to make quick profits or chase short-term gains. Instead, he looks for companies that have long-term growth potential and holds on to them for years, if not decades. Buffett has said, "Our favorite holding period is forever." This long-term mindset allows him to ride out short-term volatility and focus on the overall growth of his investments. Focus on long-term growth rather than short-term gains. Invest in companies that have the potential to grow steadily over time and be patient in letting those investments compound. Warren Buffett is known for his love of reading and continuous learning. He spends about 80% of his day reading and believes that constantly expanding your knowledge is essential to success. Buffett once said, "The more you learn, the more you earn." By staying curious and always seeking to improve your knowledge, you can make better decisions and stay ahead of the curve in your investments. Be a lifelong learner. The more knowledge you gain, the more equipped you'll be to make sound financial decisions and take advantage of opportunities. One of the most important traits that Buffett attributes to his success is discipline. He doesn't let emotions drive his investment decisions, nor does he deviate from his strategy when things get tough. He sticks to his principles and remains disciplined in his approach, even when the market is volatile. This discipline has helped him avoid many of the pitfalls that trap other investors, such as panic selling during downturns or chasing after trendy stocks. Stay disciplined in your investment approach, stick to your strategy, and avoid making emotional decisions based on short-term market movements. Buffett's portfolio is often concentrated in a few high-quality companies, rather than spreading his investments thinly across many different stocks. He believes that it's better to own a few excellent companies than to own a lot of mediocre ones. He has said it's better to buy a wonderful company at a fair price than a fair company at a wonderful price. This focus on quality over quantity has been a key factor in his long-term success. Focus on investing in high-quality companies rather than trying to own many different stocks. Quality trumps quantity in building long-term wealth. Buffett often talks about the distinction between price and value. He believes that the price of a stock doesn't always reflect its true value, and that successful investing involves identifying companies whose stock price is lower than their intrinsic value. He once said, "Price is what you pay. Value is what you get." This approach allows Buffett to buy stocks that are temporarily undervalued by the market and benefit when the market eventually recognizes their true worth. Learn to distinguish between price and value. Don't be swayed by the current price of a stock. Focus on its long-term potential and whether it's undervalued by the market. Despite his immense wealth, Warren Buffett is known for his humility. He doesn't boast about his achievements or let his success change his down-to-earth approach to life. Buffett believes that staying humble and grounded is essential to maintaining perspective and making sound decisions. He once said, "You should be humble enough to admit mistakes, but wise enough to learn from them." By staying humble, you can remain open to learning and avoid overconfidence, which can lead to poor decision-making. Stay humble, no matter how much success you achieve. Humility allows you to keep learning, avoid overconfidence, and make better financial decisions over time. So there you have it, 21 powerful tips from Warren Buffett to help you build wealth, even if you're starting with nothing. If you found this video helpful, please give it a thumbs up, share it with friends, and don't forget to hit that subscribe button. We're committed to bringing you more valuable content to help you on your journey to financial success. Remember, building wealth takes time, patience, and smart decisions. But with these tips, you're well on your way. Thanks for watching, and we'll see you in the next video.